We'll get a quick one in and welcome in, guys. Welcome in. It is Sunday, November 16, 2025. I'm your host, Gerardo G. Money Pius. And yeah, we'll just get started here with the chart. But yeah, just quickly say hello. Took off this week. I got a little bit sick. And, you know, I guess you forget the swing of things, right? Can't even turn on my computer and so forth. My computer also needed a reboot. I didn't even touch it all week long. My main computer. I was on my laptop a little bit, but yeah, I guess I needed a break as well. But welcome in, guys, to the session. Thank you guys for your patience. Sunday, November 16, 2025. Um, I'm your host, Gerardo G. Money Pius, and as always, right, these calls are for educational purposes only. But yeah, let's go ahead and start reviewing the week. We'll look for some confirmations of how everything played out, and then we'll do a quick weekly outlook. I'll do the best I can here to stay on normal schedule. It's only 10 minutes before 8:30, but we'll try to squeeze it in as much as possible effectively. And if we slip over, I'll try to stay in line there. But this is I erased the chart that I had from last Sunday, but our speculation was for it to go up and at least go to the 23%, guys. And look how accurate this is. I mean, um, what I did here was I took the last, I think we talked about it last class, and I think I got to go back to it and kind of rewatch some things. There were four things that I looked for, right? To find control and direction, I believe is what I said, right? We got the weekly candlesticks, bullish or bearish, the daily candlestick, bullish or bearish, but also, right, those three consecutive candlesticks are important. Okay. And it's interesting, right? Because you have more consecutive weeks of bullishness to the left, but counting the last three, I mean, based on this fib, was the way to go, right? So we saw three consecutive pushes up, and this blue box represents that range. And we measured it right here with the fib, and it came in and touched perfectly the 23%, like a wick perfect right there. And again, right, the Fibonacci retracement tool is fractal. The market is fractal, so you can use that same movement in any direction. All right, as long as you find a type of controlling direction, I think it's fair game to use a fib. So there's as long as you can find control direction, as I mentioned, right, and a high and a low, or a low and a high, you can definitely use a fib. So, for example, I believe in the chat, Andre was saying that he considered that this push down was his high and low for reference, right? So you see, he saw price peaked, made a strong push down, hit the low down there, and then this retracement here was about just above 61.8%, right? Just above it. And price likes to go back to those areas. So if I would measure that from high to low, and I'll move this little box out the way, you see how we came right in between the 78 and 618. It hit, but it hit more exact to 23% towards the top side. So long story short, right, that's how we use the fib. And the question is, like, which high are you going to use it? Which low are you going to use it? So I think that we're using it enough to kind of establish the top three, the top four ways to use it, right? Weekly candles, daily candlesticks, three consecutive candlesticks of direction, and then obviously the ETM candles, right? Anything lower from there is possible. I mean, we've entered in single candlesticks. It all works the same way. Like we have single trending candlesticks. So that's really good to know. It gives a lot of confirmation to continue, applying this movement for it, a good foundation. And so if we come to reverse, right? See how price here now on this swing from high to low, right? It almost touched the 23%. And it dropped very hard. The moment 8:30 hit, I believe, we just got the pullback from there. But what I want to do is this, right? I want to review what confirmations could we have done to get this push down to tell us to stop on the lower time frame with the S&T system. And so let's check that out right quick, okay? I'm gonna go ahead and rewind to there. Okay, rewind to there. And we'll go to the 5 minute chart now. And again, in my opinion, right, is not looking left here, guys. I think that's the a lot of times we try to do we get to this area of interest and then we start looking left over here, like, oh, there's gonna be a drop base drop or fair value gap and stuff. And yes, those little things are there, right? They're gonna be there. Like this line here represents the 23%. If we'll do this, we'll play fair game and we'll analyze anything in this area, right, where everything crossed, where everything found resistance and turned around, right where this line crosses and where the circle is. Okay, so let's kind of go maybe to a 4 hour chart. All right, and let's see what we find there. There you go. So on the 4 hour chart, which is interesting as well, right? So remember this line represents the 23% of that weekly thing that we measured, right? So if we look left, and this is obviously forex.com, right? Forex.com is different from Oanda. But what's interesting about this circle here in the 23%, and we look left here, what kind of confirmations could we find that we just talked about that give us reason to say, okay, price could turn around there? Check that here. 1, 2, 3. 3 consecutive. I think what you're saying, Daniel. 3 consecutive bearish candles, right? If we were to measure those three right there, that's about 50, 61%. I think you guys are seeing this BC down to the left. Maybe this one, kind of like a flip zone, right? Which is also valid, definitely valid. Okay, but yeah, again, we just talked about it. These three candlesticks here, they represented control and direction. Don't count this one. Don't count this one. We always count the last three. Okay, even though let's say we have 5 consecutive, we'll keep, we have three in a row. Count those three. You get the fourth, drop the first one, count the next three. Right? That's kind of the rule that I'm kind of using for consistency, guys. It's always about consistency. Let's measure those three, and look, price came in right in between 50 and 61% of those three candles. Okay. All right, let's drop the time frame a little bit, and we're just simply going to focus on 2 hour now. Let's hide indicators as well. And nothing really there in the 2 hour chart. La vela independiente, Pablo? Yep, that's true too. Yeah. This, see, yeah, Pablo was saying, yeah, this independently, this 61, this candlestick right here, independently, that's also a area where price came into, and exactly 61%. Same thing. Yeah, so you can see you can do it different ways. You can look for your three candlesticks and get the middle one. Isn't this the fair value gap gain animal, right? That there is, and there it is. It kind of came in and filled some of that imbalance right there. All right. So great observation. Victorito, good morning. Okay, 2 hour, there's nothing there. 1 hour chart, nothing really there, but also fill the values there. I'm going to 15 minute automatically. Let's see. And look here. There's a little base drop right in that area right there. So again, you can always find confirmation, but I think to me, it's over here, guys. Okay, you just got to find a way that when price gets to your level of interest, right? How can we catch this drop? Right? How can we catch this drop? And let's play it a different ways, right? We reached our area of resistance, our point of interest for price to reverse. Let's draw a little trend line there. All Let's draw a little trend line right here, give or take. And let's see how price behaves around this trend line when we hit play. All right, breaks the trend line, continues going, and then it makes that huge drop. All right, so maybe I didn't draw my trend line properly. I was waiting for a break and retest. So let me kind of readjust the trend line a little bit on these wicks here. Okay, and let's try it one more time. Okay, so now the impulse is to the top side, right? And I drew my trend line. Now I connected properly here. Okay, and obviously that's how it is. Now that's the play. So here, buyers are fair to go in, right? Trend line touch, trend line touch, trend line touch. Okay, continuation is valid. Break the trend line. And if I extend this just a little bit more, still keep this good. It almost did a break and retest. You see that, guys? Break the trend line, retest, and then from there, it dropped. Cool. All right, let's view it another end. So this is kind of what we're looking for, in my opinion. That's the break the trend line kind of confirmation scenario. All right, so maybe we can do like some support and resistance lines. Let's see this little support right here, right there. You see that? And let me erase my trend line, and let me call this support and resistance. That doesn't. There it is. Okay, and look what happens here. We break the support there, comes back very near it, and then comes. Let me see. And there it goes now. You see that, guys? So break a trend line, break a resistance, came back and somewhat retouched it, went back down, came back and kind of came back to the same level, and there it goes.
Yeah, it actually kind of did do a retest at just a different support line. It came and retested
Like this one here, Dynamo?
that one. Yep, that one there. That's another support and resistance. Or exactly.
Mm-hmm. Mm-hmm.
Yeah.
So again, right, this is like all these trend lines that we draw, the support and resistance, they're not exact, right? They're not exact. And but again, though, here goes the patterns that play out every time. That you can get used to. And again, though, right, this is price action, price movement. It doesn't matter what time frame we're looking at. Here every candle is 15 minutes. But if we go to 30-minute candlesticks, what I just did could happen in the 30. It's just the scale of the candlesticks will show us a little bit different. Alrighty. All right, so check this out here. So then let's kind of be a little bit more fine-tuned about this. You draw your trend line, you wait for a break the trend line, right? What does this movement here, okay? This movement there is our impulse, right? Well, let's measure it from high to low. Okay, everybody follow along. There goes the impulse. There goes the strength that I was looking for. So there goes the impulse. You hit play. It goes back, touches the 61.8%, right? And then boom, comes back down. And look how price traveled, guys. Made the impulse, came back 61%, briefly got a little pullback where? At the 23%. 38% came in and turned the price around. And then we reached the way lower extensions that we normally don't have on because usually don't hold price that long. But almost, I think it doubled this fib. Let me just double check here. Where's that? Yeah, I see one. There it is. There goes the one. -1. Perfect. There it is. Okay, so a complete movement, complete movement. So just kind of giving some validation here to the Fibonacci retracement tool, right, and how that works. how you can see it in different ways, and how you can find support and resistance in different ways. All right, now let's do it this way. Okay, we had our trend line here. Okay, so then we can technically measure it from low to high. Okay, and then price comes in, breaks the trend line, breaks 23%. It found some resistance at that 23%, and then does this deep drop to 61. 61%, right, is where what buyers would step in based on that impulse in that direction, correct? And then price does what? Comes back to where? The 23% to the T, and then it does that drop. And Pablo, vamos a usar tu fib. ¿Qué le pones? 150, negative 150, and 1.618. Así mero, ¿verdad? And there he goes. Hasta ahí topó. So see, guys, how everything is kind of connected in the whole. It all starts where we start our fib, right? It all starts where we start our fib, and from there it goes. All right. So the good thing, me taking
So there's no wrong way or right way. As long as you find that impulse, it could be a bearish, it could be a bullish. Just as long as you find that impulse and put that fib on it.
that's it. That's the best way I would summarize it, Mr. Ron. Wouldn't you say the same thing, Dan? Right? The 1, 2, 3 strategy, right, Dan? You live or die with it. You can.
Absolutely.
And then on that comment, Mr. Ron, that's the reason why taking the higher time frame is always important because it's the most stable, right? But again, though, it can, the fib will work on any time frame because it always has different scales. But yep, as long as you can see that impulse, look for your low, look for your high, and put a fib on it, you can then use those fib levels as support and resistance, areas to trade towards, areas to take profit, areas to enter, levels to exit. And as long as you can read those levels, and we've been finding a lot of good consistency on that 23%. So no, that's where we're at. So yeah, but again, right, this I definitely was in front of my computer all week long coding, and just updating our SMT box system. And let me see here. Let me turn it on. I added some very nice features to it. Um, just to kind of keep it simple, right? Kind of the same look, but as you guys see here, gosh, let me hide that. Let me hide that. So again, this is where it gets tricky, right? Because see, we reached this area up here of that resistance level of the 23%. And everything was bullish, right? Everything in the system was bullish. So, okay, we know that the weekly 23% is strong. We have to wait for the system to turn around to really give us that direction, right? So at this time, everything was bullish. The quick little updates, guys, right, is that we now are using the four boxes 17, 52, 108, and 204. They're all connected. I added these little pivots at the edge of the boxes, so they're in the bottom, so the structure is bullish for all of them. Okay, and at the same time, I was able to code and highlight the little trend line based on the two strongest ones. You see that get there? So this is connected to the 204 and 108, and the trend line is somewhat breaking. Okay, so that's also a neat feature there that we can use. But I don't. This is the updated one. It should be connected over here. Because I have like so many updates. Hold on. Let me just double check. Look at all these updates that I've been doing. That's it. So here it is, right? So when do we know when the system is ready? Well, you gotta let time go forward, let the system turn around. Okay. Notice here that we kind of went bearish on the momentum. I won't go too much into detail on this. Notice how the trend line switched, right? Even though when we got down here, right, we got down like this, right? The 204, we're still bullish on structure, but the momentum is bearish now. And then pull back. Here comes the trend line. The trend line disappeared just because there was no two lines to really connect to. Okay. And there he goes. The trend line finally appears. And and then from there goes the downside. So again, a lot of times, right? A lot of times, I think I've always said it, right? People are trying to get in on that first entry, but the most satisfactory entry is being able to catch the second move, the move after the move, the second move after the impulse. I think that's the one that's more important. And if you're able to catch those, you can enter with more confirmation. Entering on the very first impulse from a bullish scenario, you always risk that proper percentage. But once you see something with a lot of good confirmation and things are well, that it gives you a lot more confidence to maybe get a better lot size than those Lambo lots, right? Those Lambo lots, and there it goes, guys. Everything is moving downwards. So once I'm gonna try to get some final touches on this today, and if I thought we were supposed to be connected over here. Once it's done, I'll make sure I'll share it back to everybody as soon as possible. But yeah, just giving you guys quick confirmation of what happened after that touch, and we'll go from there. All right, guys. Let's see. Let's go ahead and wrap it up here with the weekly outlook. My pleasure, Sylvie. Of course. Um, let's go ahead and wrap up here with the weekly outlook and see and look at this on the higher time frame. Look where we're at. The trend line will appear on the higher time frames. We do lose the S&T box, but you can always kind of check to see how we look on different scales with it, and yeah, we'll see. We'll see. So let's go ahead and remove all drawings. Let's get into our higher time frame chart. Let's look for that weekly candle. Okay. Interesting, right? Could this be Dr. Latrice's morning star, the start of the morning star, or could it be a start of reversal? We don't know. Okay. But we'll start with the previous weekly high. All right. And then the previous weekly low of last week. Perfect. We did have two consecutive bearish weeks. We had a little baby right there, our inside bar. We expanded out. We noticed a 23% touch of that 3 weekly candles. We went to the open of this first drop. A lot of times when price reaches that open, we get a big rejection. So but we closed below both of these candlesticks. So that's what's interesting right there, guys. Okay, we did close below these candlesticks there. So I think still, right, these three bull ones are important. Okay, so let's go ahead and box those in how we had them. Right there. Okay, we're at the give or take at the 50% to them. We already touched like the 78% of them, I believe. Yes, we already did. We already touched the institutional level, okay, of those three candles. Okay, so this was an impulse, a retracement. It touched the institutional level, right, of those three candles. Let me just rewind so you guys can see that. Okay, 3 consecutive candles. Drops 2 weeks in a row. Touches the institutional level. And we always said it, right? If we enter at the 61 and 78%, where's our take profit at? At the 23. Okay, because we got to pass those sellers from that level. And there it goes. Okay. So given that we were already down here before, we could easily come back to that same area. So I don't mean I would like for us to come down here. 38.94. We also kind of get a feel of what's happening with fundamentals, right? Economy seems like it's turning around in the United States. Um, interest rates are going down in some mortgages, and I've been hearing on YouTube with some people that I follow that they're going to introduce 50-year mortgages to make people, and Fannie Mae, Freddie Mac are going to remove their credit score limitations. I mean, that's probably all speculation, but that like, come on now. So giving us, yeah. So, but yeah, that's where we're at. Okay. So I still like, I don't mind this fib as well. Yeah, I think it's important to keep in mind of. But let's focus in on the weekly candlestick that we always do. Okay, so let me go ahead and get this one out the way for now. Let's go to the 4-hour chart. In the 4-hour chart, there goes the previous week. It's just an impulse to the top side. And so, obviously a little tricky. We came back touching the previous weekly high a few times. By the rumor, selling the fact. That's true. And it looks okay, right? It looks all right. So let's go ahead and put a fib on this previous week. That's so. All right, and we came down to the institutional level. Okay, we sure did. Okay. Could this institutional level take us back up to 23%? May or may not. Okay. Let me put into the 50. 2-hour. Okay, now so let's look at the 2-hour chart. Technically, right, we have 2 consecutive bearish days. This is a bearish day here. All right. So Monday was bullish, Wednesday and Thursday was bullish. Friday was bearish. We got a nice push up here. And then we get another one. So we got 3 bulls versus 2 bears. And because it's not 3 in a row, right? I would like to see, I'm gonna only measure, keep that box in line right here. All right, let's see how that looks there. Okay, so this is technically Friday's price action, correct? That's Friday's price action. Let's go ahead and measure this high to low. Something telling me is we're slightly more bearish. So I'm kind of focusing in on the bearish move. So this is the previous day, Friday's price action. And I would like to see us kind of visit maybe back to 50%, 61%, and then come back down to the extension. Okay. And given that we're slightly countering the day, it's a little tricky for me to maybe just come back to the lows, right? To these lows will be the ultimate target for the week. One low at a time. Let's see if I can find quickly some confirmation right here, and let's put some ETM candles at this level. Okay, there's a 4-hour fair value gap there. Let's look at the 12-hour. Nothing really much in the 12-hour, other than support and resistance down here at this rally-based rally. 8-hour, 4, 2-hour, still the fair value gap. 1 hour, a lot of fair value gap right here. A lot of strength down up there. Nice little drop-based drop right here. Good area to come back and kind of get that volume from there. Oh, there it goes. That's the one that I wanted. So see why this one was interesting, because I wanted price to come back to the 50 and 61% level of the previous day. And that's the reason why that one caught my attention. It's at the level where I want to see price retrace to. Okay, there it is. That's the one. I think I like that one, guys. Let's go back to our regular chart. This is previous day Friday. Top. And 2 hour. There we have it, guys. I really do like this chart. We get some momentum in the confirmation intraday. I think we can get a good move, a really good move.
And you might be right, G, because I'm looking at you were talking about trend lines earlier, and there's our
Okay.
trend line right. Whoops, there, like this low. That these two candles over here, over on this end, are if you draw the line across your trend line, you're right on that'd be
Gotcha, man. Let's see. Go ahead and use the extend feature. There it goes, guys. Give or take, right?
give or take. That's a pretty good indication that we could test that easily and then come back down and go for the lows.
Beautiful. I like that. So let's go ahead and do this. Kind of maybe we kind of hover around the trend line a little bit, right? We break it, retest, and then we go down. Something like that. I think I yeah. So yeah, these areas right here are also very important on the trees, right? It's just more about it's not about the 20. Actually, I've always said I like the 2 minute and the 20-minute time frame from gold. Those were pretty good, but the 20-minute is very nice because of the level where it's at. It's coming to the 61.8% for sure. It's actually perfect. Perfect. Ahí está, Pablo. Está buena. All right, guys, I will share this chart here with you guys. Thank you guys for tuning in here. We were able to get condense a lot of things here together. And there goes the Goldie chart for that. And there goes the image. But yeah, I'm still working on wrapping up that update for the S&T box, guys. Once it's there, I'll update everybody to the new indicator, and any other updates or stuff. I'll be in touch in our WhatsApp group to kick us off. But yeah, that's the weekly speculation. Once the video stops also saving, I'll go ahead and put it in the YouTube for more review.
So are you doing
Vestido,
courses? Are you doing courses tomorrow, throughout the week?
I'm not sure yet, Mr. Ron. I think I had to send you a message. Yeah, for those that are subscribed to the COC, I had to send you guys a message. I took last week off. I may take the rest of the month off with COC. But if I do get that approval to take the rest of the month off for COC, I will be doing our classes for the legacy group on the
Oh,
same
okay.
schedule. On the same
Okay,
schedule.
gotcha.
Okay. But
Yes, sir.
yeah, thanks for that, bringing that up, that question there, Mr. Ron. Forgot about that. But so for our group, there will be sessions, and either through Zoom, and I'll share the links on the WhatsApp. However, if we can get the approval the rest of the month off, it'll be the normal stuff. But I'll make sure I'll update you guys, this evening for all that. We'll wrap it up. Yeah, got anything else? Feel free to let me know in the chats, and we can go from there. Everybody have a great rest of your Sunday, and we will see you then. Bye now.
Thanks, G.
My pleasure, guys. My pleasure.
Thanks, G.
Thank you, Ms. Iris. We'll see you guys later.
All right.